Hey guys, it is Wednesday, January 3. It's just around 4 a.m. Still 88 degrees over here because it's 5 o'clock at night. Uh, this is rare. This is very rare what I'm doing here, but because I've not had a chance to get any sleep and I'll probably take a nap after this, I am doing a video of what I'm looking at right now because I can't do JP Morgan as a 32 trade setup that I think I might actually go ahead and execute on today. So, yesterday, looking at the NASDAQ, down 1.63% at the close, 2.25% midday. SPX failed to get minus 1%. We've covered all of this. The Russell, again, another one down to that critical level, but not breaking it. But then you have your Dow Jones, right? Your Dow Jones taking all of it. Everything it could get, the Dow Jones was taking. And you look at your heat map yesterday and you see along your heat map how it's all over here into drugs, a little bit into the banks, a lot of it over here into oil and real estate, utilities, and they just absolutely crushed big tech. Well, there's a little one right here, right in the middle, where it's called restaurants, which I happen to know quite a bit about of, having been through that for many years prior to getting into the brokerage business, and I like it. I like it a lot. And what I mean is, I like McDonald's. I'm looking here at McDonald's on a weekly in a very standardized format with the RSI 14, the multiple green weeks that we've been looking at here coming off of that October low, you know, the channel that it's been trading into, everything about it coming up here to the upper Keltner over on the weekly that it was running through over here February, May, April. Uh, and I like this. I like this a lot. You can see here looking at the volume profile, the volume has slowly been fading off. Granted, we did have the holidays, so I'm not going to go against that. You look at your standard MACD, and it is clearly bullish on the weekly channel. Your money flow index over 14 weeks, just up into the overbought areas as it was back here in June, going back into 2021. Same as it was back here in September, October, going back into 2022, 21. Never got that during the course of 2022 or 2023. And that's where we're at right now. We are at big time money flow indicator overbought levels. Come over onto the daily, and the daily, again, using standard RSI 14, very clean looking sell divergence setup, overbought above 70 over on the RSI, upper Bollinger Bands being rushed up to into this dip that we had here, 295 to 285, going back just a couple weeks ago, is the equivalent of SPX 4697. And you can see how we're up here at this moment. Big volume day yesterday, start of the year. Not going to hold that against it. But you look over at your MACD and you can see your MACDs were crossing over. And I'll show you an even bigger picture in a minute. MACDs were starting to cross over. Now they're kissing, and your money flow had peaked in the early part of December, and now it's slowly starting to fade back in with the Santa rally. Well, here's what I like about McDonald's, and I'm looking at McDonald's from a big, broad, wide view here, and where I'm looking strictly is my RSIs for the moment. I'm looking at my 6-hour RSI. I see I got a nice little sell divergence. I'm looking at my 12-hour RSI. I see it's extremely overbought. Not as overbought as it was when it went to 295, but it's already up here, up into the plus 90 area. I look at my 4-hour RSI and I see this thing's got a dirty Sanchez sell divergence sitting in it. And I come over onto my 1 hour, I see the exact same thing. So I'm looking at this, and again, now that I'm a little bit zoomed out and cleaned up, this yellow line is the 200-day moving average. The red line is the 50-day moving average. So from a textbook point of view, this has not had a bullish crossover where the 50 crosses the 200, which would indicate a momentum change and a shift to the upside. No, we don't have that. The 200-day has been running above the 50-day for quite a long time. Just recently crossed above the 100-day back here on the full moon the day after Christmas on the 26th. But being as how it's up here right around this 297, 300 level with a big Fibonacci right up there at 300, I like this. I like this a lot. Do I have it on the next screen? No, I don't. Do I have it over here? Yes, I do. So I'm looking here at McDonald's, and this right here, down from December 15th, is your equivalent of SPX 4697. You're trading up here at 298, well above the 5-day moving average, which is just above 295 at the moment. 10-day moving average down here at 293 at the moment. And then you've got your 20-day moving average right above the minus 3% level. Now, I've traded McDonald's a couple of times, and I've done pretty well with it. The one thing about McDonald's, though, is it's not a heavy options ticker. It's not. I mean, we're looking here at January 12th. January 12th, next week, you've got 222 open interest over here on the 297.50 calls. You got 255 open interest over on the 295 puts. That's pathetic. We come over here to January 19th, which is options expiration, and your major option on the put side is at the 280 and the 275 level. That's where your major option in open interest is. You come over onto the call side, and your call side's loaded up on the 300s, the 295s, 290s, 285s, 280s, all loaded up over on the call side for that. So again, it's not that somebody isn't, getting short, but it's that it's got such a sexy setup to it. And what I'll show you here in the email is, okay, the 300 puts are 440. The 295 puts are 207. And again, looking at what I see, looking at a short time frame here, I'm looking at a 15-day. We'll look just here at the week to date, remove all these studies. The lows prior to the open yesterday were down here at 295. All I would like is to get a dip down to 295. And a dip down to 295 would be more than adequate for either one of those to work out, either the January 19 300 puts or the January 19 295 puts. So I like this. And from a bigger, broader, wide view, you've got a fake print over here at 277.33 from back in the middle or early part of December. So something to consider for those that want to go a little bit further out. Granted, earnings are at the end of the month, January 30th. I like this. I like this a lot. I'm going to put it in the email for you, and I'm virtually committed right now that as long as this doesn't get a gap down of any significance and the pricing on those options are still the same, I'm going in for McDonald's.